It was evident from the very beginning on April 20 that the oil market was headed for trouble. Frantic sell orders had been pouring in overnight, and any traders who connected to the NYMEX platform that morning could see a bloodbath was coming. By 7 a.m. in New York, the price on a key futures contract, West Texas Intermediate for May delivery, was already down 28% to $13.07 a barrel. Thousands of miles away, in the Chinese metropolis of Shenzhen, a 26-year-old named Axiang Chen watched events unfold on her phone in stunned disbelief. A few weeks earlier, she and her boyfriend had sunk their entire nest egg of about $10,000 into a product that the state-run Bank of China dubbed Yuan Yubao, or crude oil treasure. As the night wore on, Axiang began preparing to lose it all. At 10 p.m. in Shenzhen, 10 a.m. in New York, she checked her phone one last time before heading to bed. The price was now $11. Half their savings had been wiped out. As the couple slept, the rout deepened. The price set new low after new low in rapid-fire succession, the lowest since the Asian financial crisis of the 1990s, the lowest since the oil crises of the 1970s, the first time ever below zero. And then, in a 20-minute span that ranks among the most extraordinary in the history of financial markets, the price cratered to a level that few, if any, thought conceivable. Around the world, Saudi princes and Texan wildcatters and Russian oligarchs looked on with horror as the world's most important commodity closed the trading day at a price of -$37.63. That's what you'd have to pay someone to take a barrel off your hands. Many things about the explosive, flash crash-like nature of the sell-off are still not fully understood, including how big a role the crude oil treasure fund played as it sought to get out of the make contracts hours before they expired, and which other investors found themselves in the same position. What is clear, though, is that the day marked the culmination of the oil market's most devastating crisis in a generation, the result of demand drying up as governments around the world locked down their economies in an attempt to manage the coronavirus pandemic. For the petroleum industry, it was a grimly symbolic moment. The fossil fuel that helped to build the modern world, so prized it became known as black gold, was now not an asset but a liability. It was mind-bending, said Keith Kelly, a managing director at the energy group of Compagnie Financière Traditionnelle, a leading broker. Are you seeing what you think you're seeing? Are your eyes playing tricks on you?